All right, let's dive into Emami Ltd's second quarter results for fiscal year 2025. Got the press releases, investor presentations, even took a look at the financials themselves. Going beyond just the headlines here, really wanted to get into the details on this one, especially since it was a listener request.
Ah, yeah. Seems like someone's really interested in seeing how Emami's doing in the current economic climate.
Absolutely. I mean, it's impressive they managed to sustain and profitable growth, considering things like high food inflation and even the political unrest in Bangladesh.
Yeah, no doubt, a testament to their resilience for sure. Revenue growth was modest, around 3% overall, but the profit after tax, that jumped by 19%. That's where things get interesting.
So not just growing, they're getting more profitable. What's the secret sauce?
Well, if we look at the financials, there is a clear pattern. Gross margins are up, EBITDA margins are up, even PBT margins show a significant increase. They're focused on operational efficiency, becoming leaner, meaner.
Doing more with less.
Exactly, and get this, they achieved this while actually decreasing their advertising and promotion spending this quarter.
Wait, hold on. They grew revenue while spending less on marketing? How's that even possible?
It seems they're really maximizing the strength of their existing brands, leveraging those strategic partnerships. Speaking of brands, this quarter saw some really strong performances. Navratna, Dermacool, and their healthcare and pain management ranges really stood out.
Right, yeah. Saw those highlights in the press release. Seems like they're tapping into that growing consumer focus on health and wellness. Makes sense in the current economic climate.
Absolutely. When times are tough, people prioritize taking care of themselves and their families. Now, let's shift gears a bit and look at their international performance. Despite the political turmoil in Bangladesh, their international business still grew by 6%.
Yeah, and the press release mentioned that excluding Bangladesh, that growth was actually 12%. What's working so well for them in those other markets?
It seems they've really found success in the MENA region that's contributing significantly to their international revenue. Big question is whether those strategies can be replicated domestically.
It'll be interesting to see how they adapt, for sure. Speaking of adapting, they launched 11 new products this quarter.
11, they are not slowing down that innovation engine.
From what I gathered, it's a good mix of new offerings and smart relaunches. That Dermacool sweat reliever, super active talc, caught my eye. Got to be prepared for that summer heat. And then there's the relaunch of their Bora Plus soft cream. Always on the lookout for good moisturizer.
And it's not just about capturing that traditional market. They're also going all in on their digital presence with new products specifically for their Zandu Care online portal. Products like the Zandu Daily Health Super Greens and the Zandu Hair Growth Serum, very much in line with the current health and wellness trends we were talking about.
It's fascinating to see them catering to both traditional and digital-first consumers. Almost makes you wonder, are they ahead of the curve in the FMCG sector? Or is this a sign of a broader shift towards a more digitally driven future for consumer goods?
Definitely a question worth pondering. But before we go down that rabbit hole, let's zoom in on one of Emami's boldest moves this quarter. They increased their stake in Helios Lifestyle, the man company, to a controlling 98.3%.
Whoa, that's a big investment. What's the strategy there?
It seems Emami is making a big bet on the male grooming market. It's a rapidly growing segment, huge potential there.
Savvy move, especially considering the man company's already strong online presence. Fits right in with Emami's digital push. So they're optimizing operations, innovating, expanding internationally, making strategic investments, and doing all of this while navigating this, let's be honest, tricky economic landscape. With all these factors in play, what's their outlook for the rest of the year?
Well, they're projecting strong growth in the second half. Driven by a few key factors, they're anticipating improved urban demand as inflationary pressures ease, and expect their winter portfolio to perform well given, the upcoming winter season. There's also a rather interesting development they've hinted at, the relaunch of the Fair and Handsome brand.
Oh, that's unexpected. Given the past controversies surrounding fairness creams, it'll be interesting to see how they navigate that. But let's move on for now and get into the nitty-gritty of their financials.
Absolutely. Let's crack open that income statement and see what's fueling their impressive profitability this quarter. For starters, their revenue from operations, essentially their sales, reached a substantial 890.6 crore.
That's a pretty big number. And I see that the majority of that revenue, roughly 98.7%, came from their core product sales, after accounting for any returns or discounts, of course.
Exactly. And if we break down these net sales further, We see that their domestic business contributed 726.27 crore, while international operations brought in 164.32 crore.
So the bulk of their revenue is still coming from India. But it's clear that their international operations are playing a bigger and bigger role, especially when you consider that impressive international growth we talked about, even with the challenges in Bangladesh.
Right, and speaking of challenges, one area to keep an eye on is their material costs. These costs, which include raw materials and packaging, came in at 261 crore this quarter. With inflation still a concern, any increase there could directly impact their profitability.
Good point, especially when you consider they managed to actually decrease their spending on advertising and promotion down to 145.7 crore this quarter. Seems like they're getting more efficient with their marketing, maybe leveraging digital channels more effectively.
Indeed, and of course, we can't forget about their staff costs, which amounted to 112.9 crore this quarter. Makes sense given their large workforce and likely investments in things like talent development and retention.
Now let's dig a bit deeper into that income statement. Their EBITDA, or earnings before interest, taxes, depreciation, and amortization, reached 250.5 crore.
EBITDA is a really key indicator of a company's operating profitability, and that 7% growth for Emami is quite healthy. Demonstrates they're effectively generating cash from their core operations.
Reassuring to see. And that positive trend is reflected in their profit before tax, which reached 220.4 crore. And ultimately, their bottom line, their profit after tax, stood at an impressive euro 211 crore.
Their income statement's definitely painting a positive picture. They've managed to navigate a challenging environment and deliver that sustained, profitable growth. Now, to really understand their financial position, let's flip over to their balance sheet.
Sounds good. Let's start with their assets, everything they own.
All right, their total assets are valued at a hefty euro 393.7 crore. Pretty substantial portfolio. If we break it down, we see their non-current assets, the ones they expect to hold for more than a year, are worth 822.5 crore.
Those would include things like property, plant, and equipment, all essential for their manufacturing, as well as intangible assets like goodwill.
Exactly, and then you have their current assets, things they expect to convert to cash or use up within a year, valued at 1,771.2 crore.
Those would be things like inventory, the stock of products they have ready to go, and trade receivables, the money customers owe them.
Right on. Now, to get the full picture of their financial health, let's look at the other side of the balance sheet. Their liabilities, what they owe.
Okay, so their total liabilities stand at 966.4 crore. Significantly lower than their total assets. That's a good sign, right?
Absolutely. Means they have more assets than liabilities, points to a healthy financial position. Now, let's break down those liabilities a bit further. Non-current liabilities, obligations they don't expect to settle within a year, are worth 63.4 crore. Think things like lease liabilities for leased assets and provisions, amounts set aside for potential future expenses.
And their current liabilities, obligations due within a year, are valued at 903 crore. That would include things like trade payables, what they owe to suppliers, and short-term borrowings.
Now, the difference between their total assets and total liabilities, that gives us their equity. Essentially, the value of the company belonging to its shareholders.
And for Emami, that total equity is a healthy euro 627.3 crore.
Their balance sheet is showing a financially sound company, strong asset base, manageable level of debt. Definitely reassuring for investors. Before we move on, I want to touch on one specific item on their balance sheet. Their investment in associates.
You mean their investment in Helios Lifestyle, the man company that we talked about earlier?
That's the one. As of September 30, 2024, that investment is valued at a substantial 117 crore.
Clearly, Emami sees this as a key part of their growth strategy going forward. It'll be interesting to see how that partnership develops. So we've covered their overall performance, highlighted key brand successes, and done a deep dive into their income statement and balance sheet, examining details like their material costs, investments, all of it. Overall, it looks like a company performing well, managing their finances prudently, and making smart investments for the future.
You've summed it up perfectly. Now, to get the most complete understanding of their financial performance, we need to look at one final, often overlooked element, the cash flow statement.
Sounds like the perfect cliffhanger. We'll be back soon to break down that cash flow statement, so stay tuned.
All right, welcome back. As promised, let's unravel the mysteries of Emami's cash flow statement.
For someone who likes understanding how a business really works, the cash flow statement is gold. It gives you that complete picture of how they generate and use cash.
Yeah, it's often overlooked, but super crucial. Think of it like tracking your own bank account, seeing where the money comes in and goes out, typically divided into three sections: operating activities, investing activities, and financing activities.
Let's start with the foundation, operating activities. This is the cash flow directly related to Emami's core business operations, right?
Right. And looking at their statement, we can see they generated a healthy 399.1 crore from operating activities in the first half of fiscal year 25.
That's a lot of cash flow. What are the main things driving that positive result?
Well, a significant portion comes from their net profit, which we discussed earlier. But it's important to remember net profit doesn't always equal cash flow
Oh, why is that?
because some expenses, like depreciation, are non-cash expenses. They impact profit, but there's no actual cash outflow.
Ah, I see. So we need to adjust the net profit for these non-cash items to get the real cash flow picture.
Exactly. That's why we see adjustments for depreciation and amortization on the cash flow statement. Adding back those non-cash expenses to the net profit gives us a clearer view of the cash generated from operations.
Okay, makes sense. So now let's move on to investing activities. These cash flows reflect Imami's investments in long-term assets, things like property, plant, and equipment, and their investments in other companies too, right?
You got it. Their statement shows they used 288.72 crore for investing activities in this first half of fiscal year 25.
And where did most of this cash go?
Well, the biggest chunk went to purchasing property, plant, and equipment. Suggests they're actively investing in expanding their production capacity.
Smart move, considering their growth plans. I also see a significant outflow for purchasing current investments. What exactly does that mean?
That probably represents investments in short-term securities, a common way to manage cash reserves. Now let's tackle the last section of the cash flow statement, financing activities.
Okay, so financing activities. This covers Imami's financing arrangements, like borrowing and repaying debt, issuing and repurchasing shares, and of course paying dividends. I see they used 88.98 crore for these activities in the first half of fiscal year 25. What were the main drivers behind this outflow?
A big portion went towards repaying short-term borrowings, showing their commitment to managing their debt responsibly.
And we can't forget about that hefty interim dividend they paid out to shareholders. We talked about that earlier.
Absolutely, a significant outflow, yes. But it's a clear sign of confidence and their desire to reward those shareholders.
All right, so taking all three sections together, we see that Emami had a net increase in cash and cash equivalents of 16.13 crore in this first half of fiscal year 25.
Meaning their overall cash position actually improved during this period. Pretty impressive when you consider their investments and that dividend payout.
Their cash flow statement really does paint a compelling picture. A company with strong cash flow from operations, strategic investments in growth, and prudent financial management.
It definitely lays a solid foundation for them to achieve those future goals.
Okay, so we've covered Imami's overall performance, highlighted those key brand wins. And we did a deep dive into their financial statements, examining their profitability, balance sheet strength, and now cash flow dynamics. We've given you a really comprehensive view of their performance in the second quarter of fiscal year 25.
We've really tailored this deep dive specifically for you, based on your interest in Emami, hoping it's provided valuable insights into their recent performance and where they're headed.
All right, we've covered a lot of ground already, from their strong performance to a detailed look at the financials. But before we wrap things up, gotta look at their strategic moves for the future.
Yeah, this is where we see how Emami plans to build on their current success. Their investor presentation highlights some key areas they're focusing on.
And it's an ambitious roadmap, that's for sure.
Yeah.
They're not just sitting back and relaxing. Their commitment to growing their digital presence really stands out, investing heavily in their direct-to-consumer platform, Zanducare.
Right, they're seeing that shift in consumer behavior, more and more people shopping online, especially for health and wellness products, and Amami's making sure they're ready to take advantage of that.
Makes sense considering the success they've already seen with Zanducare. And they're not just focusing on digital for sales. They're also using digital marketing to reach new audiences and build those relationships with existing customers.
Yeah, it's a smart, integrated approach. Another key area they highlighted is innovation. They've set a target of launching at least 10 new products every year across different categories.
Well, that's a lot of new products. Sounds like they're taking a multi-pronged approach to innovation. New product development, line extensions, even exploring acquisitions to expand their portfolio.
Exactly. They know that to stay ahead in this fast-paced FMCG market, they need to constantly innovate, adapt to those changing consumer needs.
And it's not just about launching new stuff. They're also focused on strengthening those core brands, especially in healthcare, pain management, and cooling oils.
Those categories have always been strong for Emami, and they're making sure they stay ahead of the game there.
Expanding distribution, increasing marketing investments, even focusing on premiumization. They're really catering to those evolving consumer tastes.
And they're also very aware of sustainability, both in their products and their operations. Their investor presentation really emphasizes their commitment to responsible sourcing, reducing their environmental impact, promoting ethical business practices.
It's great to see them prioritize sustainability alongside financial growth. Consumers are becoming more conscious, choosing brands that align with their values.
Absolutely. Amami's commitment to sustainability isn't just good for the planet, it's good for business too.
Okay, so considering their strong financial performance, these ambitious growth plans, and this focus on digitalization and sustainability, what's the overall investor sentiment towards Emami?
Seems pretty positive overall. They're seen as a company with a good track record, solid management, and a clear vision for the future.
Of course, there are always challenges in the market,
Hmm.
but Emami seems well prepared to handle them.
For sure, they've shown they can adapt and be resilient in tough economic times, and they're not shying away from addressing potential risks.
So as we wrap up this deep dive into Emami Limited, what stood out to you the most?
You know, what really impressed me is their ability to balance that strong financial performance with a forward-looking strategy. They're not just about short-term profits, they're making investments for sustained growth in the long run.
I agree. It's a great mix of smart execution today and a clear vision for tomorrow.
It's a company that gets it, they understand how the FMCG market is changing, and they're taking steps to stay ahead of the curve. From what we've seen, they're well on their way to achieving those ambitious goals.
So anyone looking for insights into a company that's really thriving in today's business world, Emami Limited is definitely one to watch. We hope this deep dive has given you a comprehensive look at the recent performance and what the future holds. As always, if you have any questions or want to explore any specific details further, don't hesitate to reach out.
Thanks for joining us on this journey. Until next time, keep exploring, keep learning, and keep diving deep.